Welcome back to my channel where we talk about wealth building, finance, and how to make your money work for you. Today we're going to be discussing the Silicon Valley Bank, how it crashed, what does it hold for the future of banking. So what happened? This bank has been established since 1983. It's the 16th largest bank in the US. How did it crash? What had happened was the bank decided that it would put the majority of its funds in US Treasury. At the time, it was yielding about a 1.7% interest rate. That's not bad. But when interest rates hiked and then went to a 3.7 on average, they realized that they were already at a loss before they even sold their funds. And this was a 10-year treasury. So what they decided to do was to sell their treasury. When they did that, they came at a $1.8 billion loss. That's crazy, $1.8 billion loss. Well, that report came out. And as soon as that report came out, within 24 hours, everyone started pulling their funds. And it came out to $180 billion loss. $180 billion, that's crazy. So what does this mean for the rest of the banking industry? I'd like to start with stating that nobody knows the future, and there's no way of predicting the future. But what I'm going to give you is my unbiased opinion on what it does mean for the rest of the banking industry. I feel like this is more of an isolated case. And the reason I say that is most banks don't allocate their assets the way that maybe First Republic or the Silicon Valley Bank did. And the way the Silicon Valley Bank did it was they put majority of their funds in those treasury bonds. Now, a lot of banks tend to be able to diversify their portfolios a lot better to that, and they don't put 60, 70, 80% of their funds in one basket. So legally, they have to have 10% of the client's funds. 10%. It's the only regulation that they have to have of the client's funds inside of the bank. That means 90% of the funds inside of the bank that they can invest. I think there should be more legislation on that, but it's not what we're discussing. So either way, I really don't think it's going to affect the rest of the banking industry as much. But like I said, I can't predict the future. I could be wrong. The reports out there could be wrong. You really don't. So that about sums it up for the Silicon Valley Bank and where things are at now. And there's more to come. Let me know in the comment section whether you want to hear more about the banking industry and current topics, or if you want to hear more about annuities, or you want to hear about more retirement options, or you want to hear about dividends, passive income, companies. What can you do? Like, there's a lot out there. There's a lot of ways to plan your retirement. There's a lot of ways to be able to make passive income, or there's a lot of ways to be able to invest your money. Let me know what you want to hear from so we can provide that content for you. Thank you for joining. Don't forget to hit the subscribe button. Leave your comments. Let me know what you want, and I'll see y'all next time.